Natural gas is used to generate electricity and make fertilizers. It is also converted into CNG, which is used to run automobiles. It is converted to LNG and is imported by countries to meet their energy requirements. So natural gas is as essential as oil. Russia was the largest exporter of natural gas in 2021. But its invasion of Ukraine changed the equations and plunged Europe into an energy crisis. And the effect of Europe's energy crisis is slowly being felt in India too. It is threatening to derail its gas economy. Russia used to supply 40% of Europe's gas requirement before the Ukraine invasion, but it came down to 9%. Gas supplies to Germany were also hit as Russia cited Nord Stream 1 maintenance. The pipe, which runs under the Baltic Sea, is Germany's gas supply backbone and accounts for over one-third of Europe's gas supplies. This means that Europe is looking to get gas from other sources, which leaves very little for Asia. For instance, Russian gas producer Gazprom's supply to India has been dwindling since the start of the war. Europe is now expecting 90% more LNG on the spot market than they have secured under long-term contracts. Compared with last winter, European LNG imports are expected to be up 16%. So the spot LNG prices have soared and hit price-sensitive emerging markets badly. European gas futures are more than 4 times the price a year ago, according to ICE data. Europe's TTF gas futures benchmark, a gas trading platform in the Netherlands, went as high as £346.5, went as high as €346.5 per megawatt hour on August 26, jumping over 23 times from COVID-affected October 2020. According to reports, India is now looking for alternatives and has reached out to Iraq, Saudi Arabia, UAE, and the US to secure liquefied natural gas at affordable prices. Although the price declined towards the later end of September, it was still 27 times more than what Indian importers paid for spot supplies of the fuel in the late 2020. In India, spot LNG prices were 742 rupees per million British thermal units at August end, 135% higher than a year ago and 285% higher than 2 years ago. According to analysts, strong demand for LNG will make it difficult for India to compete in the global natural gas market. Matthew Carr, head of CarZ, a London-based clean energy intelligence provider, said that crazy high prices will slow the developing world's attempt to improve access to energy and electricity. Research analyst Sumit Pokharna tells more.
We are like 50% of our gas requirement is met from imports. So we will get impacted with if anything happens in the global markets. Considering that the geopolitical issues going on currently in the Ukraine and Russian and the fallout effect in other developed countries, we believe that this is an abnormal time and should not be taken as a situation which will persist for long. Definitely we are heading towards winter and the situation may get grave from here also. And in fact, the double whammy is that the rupee has also depreciated along with it. So in INR terms, the price is increased by 5.3 times since September 2021.
High gas prices have dent India's imports as Europe is sourcing most supplies by paying record prices ahead of the winter. In April-August period, India's LNG imports fell 10%. Domestic natural gas production rose to 34 billion cubic meters in FY 2022 from 28.3 billion cubic meters in FY 21. Gas consumption too fell by 10% in August from a year earlier. In the first quarter of current fiscal, gas consumption fell 2.5%. India's gas consumption is largely accounted by fertilizers, city gas distribution, power and other sectors. Meanwhile, in India, local gas prices, which have revised twice every year, are linked to global benchmarks. So higher global benchmark prices mean that domestic prices would also rise. In line with that, the price of natural gas has been raised by 40% to a record high last Saturday. The record high local natural gas prices are likely to make CNG and PNG cost more. PNG prices have already risen 70% in the last 1 year. According to a report in the leading financial daily, Indian automakers have cut their production target for CNG-powered vehicles by 25 to 30%. City gas distribution companies are deliberating whether to pass on the cost or to absorb it, and worried that the hike would impact sales volume due to lower offtake by industrial units. At present, around 85% of city gas distribution segment consumption is being met through domestic gas and the rest through imports. Research analyst Sumit Pokharna tells more.
There was a possibility that they could have postponed this gas hike or deferred it for some time, because an expert committee is already working on gas price issue. All countries globally are struggling with rising inflation, and government has taken very proactive steps by not increasing the retail fuel prices like petrol, diesel for quite some time, and that has contained our inflation to a large extent. But given that the price increase in the gas has happened, some impact on inflation will come on this. So the sectors which will get impacted will be city gas distribution companies, fertilizer sector. Just to put things in numbers that will make the things very clear, for each and every US dollar MMBTU gas price increase, city gas distribution company need to raise CNG prices by 4 rupees 70 paisa to 4 rupees 90 paisa per kg. That is quite high. And considering that the gas price have moved up by $2.5 per MMBTU, we believe that along with the recent currency weakness, these city gas distribution companies like IGL, Mahanagar Gas, they might have to increase the CNG prices somewhere in the range of 12 to 14 rupees per kg, which translates to 15 to 19% of the existing prices.
Meanwhile, the steep hike in gas prices is expected to increase Centre's annual fertilizer subsidy bill. According to a Business Standard report, the fertilizer bill was estimated to have last risen to 2.3 trillion rupees as against budgeted 1.05 trillion rupees. On the upside, the rise in gas prices will likely boost earnings of ONGC, the key producer of domestic APM, and others like Oil India. Going forward, as we head towards winter, the gas prices are expected to remain elevated, impacting margins of CGD players and adding to inflation. In the longer term, India may need to expedite its shift to alternative sources of energy and reduce dependence on hydrocarbons.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.